I'm kind of pitching myself here as somebody who's an experienced investor, but always, I'm definitely new to this business as well. I just want to speak about this product and just how much, it has really helped me, propel myself, get better with talking with sellers, actually be able to close a deal. My strategies right now have been primarily direct mail, cold calling, and cold texting. And I've found a lot of success with Real Estate IQ, especially being able to get in front of customers, have engaging conversations. And of course, I'm hoping to use all of that to build my own business and eventually retire off.
Excited to be here, and I want to say a big thank you to Real Estate IQ. They have the absolute top leads in the industry and just make investing effortless for all of us as real estate investors here in Texas and obviously everywhere else that they're focused. And I'm proud to be associated with Real Estate IQ. Love what you guys do and love how you all help investors so that we can focus on the thing that makes us the most money, which is the job of real estate investing.
I wanted to jump on this morning and give a shout out to Real Estate IQ. I began my journey with them a few years ago, just using some of the more basic products, the off-market leads. And since then, growing and visiting and talking with not only Steve, but other people who are involved with Real Estate IQ, I've had the opportunity to actually not only be a client, but I also became an investor with them. And that is one of the beauties of being able to be part of Real Estate IQ, is it gives you the opportunity to grow as an investor, especially in real estate.
Welcome to your 3-minute update on the U.S. real estate market as of late June 2025. Let's take a look first of the market overview. The U.S. housing market is experiencing a notable shift. After years of tight inventory and rapid price growth, the landscape is changing. Inventory is rising, sales are mixed, and affordability remains a central challenge. Home sales took a significant hit in May, dropping 13.7% from April and falling over 6% compared to last year. This is the lowest level seen since the pandemic, with the South seeing the steepest declines. In contrast, existing home sales surprised on the upside, ticking up 0.8% in June for the second straight monthly gain, though they remain slightly below last year's pace. Inventory is building across the country. There are now over 500,000 new homes for sale, enough to last nearly 10 months at the current sales pace. This marks a clear move toward a buyer's market, especially in the South and West, where new construction has outpaced demand. For sellers, this means more competition and a growing need to price homes realistically. About 40% of homes are now selling below asking price, and price cuts are increasingly common. Despite the inventory surge, prices are still edging up. The median new home price is $426,600, up 3% from last year. Existing home prices are also rising.
I'm kind of pitching myself here as somebody who's an experienced investor, but always, I'm definitely new to this business as well. I just want to speak about this product and just how much, it has really helped me, propel myself, get better with talking with sellers, actually be able to close a deal. My strategies right now have been primarily direct mail, cold calling, and cold texting. And I've found a lot of success with Real Estate IQ, especially being able to get in front of customers, have engaging conversations. And of course, I'm hoping to use all of that to build my own business and eventually retire off.
Excited to be here, and I want to say a big thank you to Real Estate IQ. They have the absolute top leads in the industry and just make investing effortless for all of us as real estate investors here in Texas and obviously everywhere else that they're focused. And I'm proud to be associated with Real Estate IQ. Love what you guys do and love how you all help investors so that we can focus on the thing that makes us the most money, which is the job of real estate investing.
I wanted to jump on this morning and give a shout out to Real Estate IQ. I began my journey with them a few years ago, just using some of the more basic products, the off-market leads. And since then, growing and visiting and talking with not only Steve, but other people who are involved with Real Estate IQ, I've had the opportunity to actually not only be a client, but I also became an investor with them. And that is one of the beauties of being able to be part of Real Estate IQ, is it gives you the opportunity to grow as an investor, especially in real estate.
Okay, hey, welcome everybody. Let's get started. Today is January 15th, and we got some really cool content prepared for you. And we're gonna focus a lot on the leads and how we can work on the leads today. So quick word about our host organization. Real Estate IQ is a lead generation company, and we have kind of grown into also a community of folks that are actively doing deals, making deals as well. And in addition to everything you see here on the screen, which I would say our core product is our off-market leads, which is the freshest distressed sellers, right, that you need to get a hold of the discounted properties. Now, beyond that, we also started finding deals and matching deals as well for you. So just really kind of providing the full solution for those that are actively engaging, and you're either looking for your first deal, or you're trying to scale your real estate operations. We can help with any part of that journey. All right, I'm gonna skip all these success stories and all that. You may have seen it. If not, you can catch up on our previous live streams, and we share those stories from time to time. Now, a quick disclaimer: this event is focused on giving you education, right? Kind of showing you the either real life example in most cases, or an actual case on the deals itself. And so we actually have 2 leads that we have created for you, and we have prepared for you. And I think what's intriguing about these two leads as examples is that, normally it's hard to make these a deal. And because of a particular way we can structure the deal, we can make it work. All right, so let's get started. And if you have a lead and you need help closing a deal, right, running the due diligence and all that, either I can help you or our mentors in our community would love to give you a hand and help you close the deal. Right? So for today, Tamara's not feeling well, so it's just me, and we're gonna focus, like I said, on marketing and lead generation, working on the deals. So without further ado, let's start our kind of first segment, which is the market update. So we shared this last week, but this is so big that we really want to make sure everyone is aware that in Texas, we have a new legislation that went into effect on January 1st. And this enables faster eviction timeline and hearings. They have basically streamlined the eviction process, make it even more pro landlord. And for disposition, if it's kind of a clear-cut case, you don't need to, do much of the hearing anymore, right? They're gonna just do a summary judgment, summary disposition. So the eviction process is gonna be a lot faster. Some would say that now it's very anti-tenant. So it depends on where on the fence you sit. So right, this could be a more or less a very controversial policy. And in terms of market updates, right, the biggest news right now is that Fannie Mae and Freddie Mac have started a program to buy $200 billion of mortgage-backed bonds, right? These are the, I believe it's for the 10-year treasury. And because mortgage rate is directly linked to the 10-year treasury bonds, that has pushed the mortgage rates now below 6%. So that's a big deal. And as a result of that, we see kind of two things. One is the refinance, right? Existing mortgage refinancing. And also for purchase of new homes, that has driven the demand. So for refi, that has surged roughly 40%. All right, that's a big deal. As homeowners are rushing to lock in this lower rate after the short-term rate drop. And from a purchase demand standpoint, we're seeing a 20% year-over-year growth for applications for new purchases. Okay, so for those that are kind of looking for the right time to start purchasing, this $200 billion of 10-year treasury bond is a good news because it's kind of creating demand for more housing. And for those that are kind of actively say that you're doing deals and you're looking for refi, you're running that BRRRR method, there is advantage now. The interest rate has gone down. Let me see. I think we have some comments or questions out here. Oh, Mitchell says hello. And we have a segment. I actually invited Mitchell here to share your deal. If you have a deal, this is where we can invite you on stage and share your deal. So if you got your deal prepared, get that ready. We're gonna invite you on stage. And for any of you that are interested in kind of pitching your deal, this would be a really good practice for you to do so. All right. Okay, so let's talk about the two leads that we come across this week. This lead is in Katy, 6-bedroom, 3-bathroom. And I thought this would be a really good example for creative financing, is because if you kind of look at the key numbers, it's hard to make it work under traditional exit strategy. So the mortgage balance owed is 280,000, right? With reinstatement 33,000, but the house is really only worth 345. So in order to kind of really make this work, right? You can't just kind of do a regular offer, because if the owner accepts your 70% offer, 70% of the ARV offer, they're gonna be it won't be able to pay off their loan. So, obviously one option would be applying for a short sale and requesting the lender to approve the short sale, right? Which means the lender is going to take a loss in this transaction. Now, if the lender agrees to it, then great, right? You're gonna win this deal at a good price. But if the lender does not approve this purchase price, then it will go back to foreclosure. So now we're looking at a situation of either short sale or foreclosure. Let's see. From a subject to standpoint, right? This is one way that you can work in a subject to. If the cash flow, right? The principal, interest, PITI, principal, interest, taxes, and insurance is $3,500 a month. And you basically take over the existing mortgage, right? Pay the reinstatement and take over the existing mortgage. Well, when we rent it out, the cash flow at $3K is not gonna pay for the monthly expenses. So you'll be operating at a net loss on a monthly basis. So long-term rent doesn't work. But co-living at $5K a month, if you get it fully leased out, right? It does have a six bedroom for the house. If you get it fully leased out, then you should be able to operate on a positive every month. Given that you have really good occupancy rate, right? You can get all the rooms leased out, and maybe you can even turn this house instead of 6 bedroom, right? Very common for co-living is that they would look at a kind of living room or a dining room and kind of turn that into another bedroom to increase the number of rooms available to lease out for co-living. So there's a path here. Now, what I want to share with you here is another path, and that's what we call a wrap. So what a wrap is that after you acquire it subject to, right, you take over the existing mortgage payment, then you look for an end buyer to purchase the property, and as the new owner of this house, we're gonna seller finance it. So I apologize. There's a little typo here. It should say seller finance. So typically we can sell it at 10% above the market value. So we sell it at 380. We take 10% down payment. So we make 38,000. We take that, we will be able to pay for and cover the reinstatement cost from the purchase, right? So we make $5,000. Everybody see that? Okay, and then from a cash flow standpoint, this new buyer is going to basically have a promissory note with us, and they're gonna pay us basically about $3,000 a month. Okay, and because the new buyer is gonna pay for the taxes and insurance and HOA, I don't need to look at PITI. I just need to look at the principal and interest for the existing loan. So even at 9.5%, it looks like we can make it work, because based on the difference of these two, we can cash flow about $500 a month. So this is what we call, right? And we talk about this on our Friday office hours, and we talk about it at our Friday open house too. We call this mortgage arbitrage. So this is our mortgage arbitrage program, where you can Number one, you can make some money when you take over the existing mortgage and sell it as a seller finance, right? So you make the arbitrage. Arbitrage means we're taking that difference, right? So we're taking the difference between the down payment and the reinstatement. We can make 5,000 here on the transaction. And then from a monthly cash flow standpoint, we're also able to take advantage of the difference here. And mainly it's because, from an interest rate standpoint, it's not that much, but from because the note size itself is a little bit bigger than the existing loan mortgage loan, we're able to cash flow $500. So when I first saw it, I thought that's very exciting. That's actually pretty awesome. Even for a super high interest, that can still we can still make this program work. So if you come across deals where you think a regular wholesale method or regular wholesale sub-to doesn't work, we would be able to make this work. Okay. If you have questions, again, feel free to ask. And for very detailed questions, right? If you want to kind of really see this example again, I can walk you through this a little bit further. You can join our office hours tomorrow on Fridays at 9:30 Central Time. We can go over that. We're more than happy to walk you through it. Next, we have a Florida lead. What's common with this guy is that, look, we have a very high interest rate, right? 9.25%. And usually when you see a 9.25% mortgage rate, a lot of folks just kind of back out. But we might be able to make this work, right? So let's take a look at this one. This one, the after repair value is a little bit lower. This is a new build. This was built in 2023. It's got 2-bedroom, 2-bathroom. But it's basically upside down because it's a new build. So the owner owes $420,000 with a reinstatement of $60,000. This owner thinks that $40K is enough to reinstate it. So we didn't talk too much into the detail of why that is, but the house is very well maintained and it's pristine. The reason the owner has to sell is, number one, it's going into foreclosure, and number two, the owner has they originally thought they would be able to get the interest rate down from the 9.25%, and that was not possible when it came time to get it lowered, and that caused them to get behind on mortgage, and now we're in a foreclosure situation. So from a cash flow standpoint, I didn't even ask for PITI. In this case, I knew this is probably, if there's a wrap that's possible, it would be a wrap. Otherwise, it's hard to make a co-living work because you have a 2-bedroom, 2-bathroom a house. So principal and interest about $3,500, right? And then there's a HOA to about $250. Again, if you're able to make a wrap work, the new owner is gonna pay for the HOA also, right? So you're only responsible of doing the principal and interest. And then, so let's kind of look at this a little bit further. For long-term rent, $3K a month. Nope, that doesn't work. Co-living, actually, this is incorrect. I forgot to delete this line. This is from the last slide. So co-living does not work. It's not gonna generate a $5K a month cash flow. It's not gonna make this PITI work. So a regular sub-to purchase doesn't work. And from a wrap standpoint, unfortunately, in this case, it also doesn't work because the reinstatement amount is so high, and you're gonna need to basically make this a little bit lower. Oh, okay. So I think I'm changing my mind a little bit. I think if we do a wrap, this could actually still work. So it's about finding a buyer who's willing to purchase at a much higher price. Maybe 440 or even higher, and there might be enough room to make this work. When I ran the numbers, I think I think what I saw that may not work is that if we sell it at 440 and owner finance, the note itself is not going to be able to pay off. Your cash flow, your monthly cash flow difference is not going to be very high. You can only make a couple $100, not even $500 a month. And so the numbers are quite tight. If we really want to do it, I think we can still make that work. But for now, we can offer two options for this owner. We can offer a short sale. In this case, we'll need to convince and get the lender to accept a $315,000, right? So they're gonna have to take a $100K loss if they make this happen, or we do a wrap. And I think the wrap scenario is gonna be the one that that might work if we're able to do it. Find an end buyer willing to pay more than 10% of this ARV. I think we can still make it work. So I'm glad we get to talk about this right now and kind of open up a little bit of possibility before I talk to this owner. Cool. Let me repeat that. If you want a detailed rundown on how to do these deals, right? The office hours is the way to go. I can break this down into more details and walk you through it. The office hour, we typically have a pretty small group, and we can walk through that one by one. And if you have comments, feel free to share these here. All right, so if you want to join our funding network and participate in deals through getting the deals or participate as a private lender potentially, Randy is our funding partner, and he would love to chat with you and kind of share with you the funding and the deal opportunities that you might be able to participate in. So feel free to reach out to him if you are interested and just kind of see what's out there. His phone number is right here. The deals we have, we got some buy and hold properties. Most of them are in Dallas. We have one in Austin. Then we have quite a lot of fix and flip opportunities as well. And we have land also. So if you are kind of, you're kind of sitting on the sideline, you're ready to execute on a deal, feel free to reach out to us through our deals program. And then we have some sellers that want to move their notes too. So these are the 4 notes. I think we got a couple more opportunities. That's more of a second lien on a short-term rental. And so, obviously these are just opportunities, right? You should definitely do your due diligence as you look into this further. Okay, so just a couple more slides. Today is just me as a speaker, so I only prepared the market update and the leads and how we work on the leads for you. So we're gonna end a little bit early. Before we end, want to share the Deal Accelerator program, right? If you're looking for that kind of one-on-one, hands-on experience, right? Really start working on the deals. I think a lot of folks that are just starting out, I think it really depends on kind of your ability to make habits and all that. Some folks, with the distressed sellers leads from Real Estate IQ, they can get out there and they can start making deals happen. We have a lot of successful clients that have kind of grown their business through these leads. And then there are folks that kind of prefer to have somebody kind of walk them through how to do it, especially the first couple of deals. I was one of them. I prefer to, just kind of work with someone that already has that experience, and I make sure I don't make too many mistakes, right? I make sure I don't make mistakes. And so just kind of having these resources available and having that person that you can call on a regular basis to support on your deal finding journey, I think that's very valuable. So if you're interested, scan that QR code and get that going. Got some track records here and growing. Now, for New Year 2026, right? We're already 15 days in. Today is actually the last day for this promotion. If you want to really kind of access the distressed sellers, right, scan this QR code, and you can take advantage of this VIP pricing. You just gotta have to ask for it. Mitchell just shared that he doesn't have audio available to pitch his deal, so I don't see anyone here. Quincy has a lending business he wanted to share here on the chat. So you can look into the chat and see his contact info for refi and purchase. I think we have a few minutes for Q&A if you have questions. So I got a question on the model of kind of different exit strategy, right? So a lot of times when it comes to matching the deals, right? What is co-living? What is long-term rental? And what are the different exit strategies? I would say the main exit strategies is turning that into a long-term. Okay. So let me just kind of go over all of the scenarios. So these are all potential exit strategies. One is if you can either purchase the house with a cash offer or a sub-2 offer, right? That provides if you do sub-2, you can use the existing mortgage as financing, and you just need to basically come up with rehab. If there's margin to be made if we do a fix and flip, right? So fix and flip is one potential exit. So you purchase a sub-2 or you purchase it with cash, and either you use your own cash or you leverage hard money lender or private money lender as financing to fund the purchase and the fix and flip. Okay, so that's one exit. Another potential exit would be a long-term rental. If the long-term rental numbers support it, you turn into a long-term rental, and it's quite passive, right? When you get this lease out for a long term, you don't have to constantly look for tenants. You just gotta make sure the asset, right, the property is able to function properly and continue to use it to collect rent. So that's a long-term rental. You have a co-living model where you can rent out each room by itself, usually by the week or by the month. And if you can cash flow through the existing bedrooms, then you are in a really good place, right? Because you don't need to reconfigure the house itself. But sometimes you can cash flow a little bit better if you turn the dining room into a bedroom, for example, or the living room into a bedroom. So when you come to, I've been to several of these co-living spaces. Basically, what happens is when you walk in, you have a shared kitchen, and then everywhere else is kind of a bedroom or a bathroom that is likely shared. So it really maximizes the bedroom space, the living space for that particular house. And you just need to make sure there's enough parking around the house because you have a lot more tenants, and each tenant is gonna likely have at least one car. And so you want to make sure there's enough parking in the area. And if there's an HOA, the HOA allows for co-living. And then obviously you have short-term rental. Right? You can rent it out. You can rent out the whole house. You can rent out by room, and make that cash flow. So that's more of a day-to-day. So now you're kind of running, instead of a long-term landlord business, right, where you make sure the house is updated. When you have more turnover, you gotta make sure that there's marketing and there's folks that are constantly right on your wait list to keep the house and the rooms occupied, in addition to making sure everything is working. It's a little more hands-on in terms of the operations, but for the right people, they enjoy that because you get more cash flow, right? Because you're actually actively monetizing on the property as an asset. So there are two players here. On that kind of side, you have a buyer that's going to operate that asset and make money, right? Make the number work, and then you also have kind of the deal maker, right? The one that matches the buys, right? Contracts with the buyer, and then also kind of making it work for the seller. So as a deal maker, you can also make money as well, because you're the one that found the seller, found the buyer, and also you are structuring the deal to make both sides works. And then I talk about the wrap, right? So the wrap is the MAP process, mortgage arbitrage program process. So that's a fantastic question. A lot of exit strategies that we can consider, and I think and that's what we mean by kind of being creative, right? When you're a deal maker, you want to really kind of consider all these different options and see which one makes sense for both the buyer and the seller, and you match it. And when you match it, you earn your fees. All right, so our time is up. Let me kind of go over a couple of upcoming events. We got a couple additional classes that we're creating as well, but these are the ones that we have upcoming. So this evening we have pre-foreclosure gold mine. Really talk about how you can capture these houses, these distressed sellers, right, before it hits the foreclosure. And then we have the office hours, where you can get ask questions and just network with folks. You get a more kind of personal time to ask your specific questions. And then we have Friday open house, if you want to learn more about what Real Estate IQ is about, and how we plan on kind of disrupting the industry. That's Friday open house. And then on Saturday morning we have the class on how you can find distressed sellers, right? A lot of folks are looking for houses that are discounted. Well, discounts usually comes from distressed houses, right? Discount and distress is kind of almost equal. So if you can find reasons of distress, usually you can acquire at a discount. Or there would be distress enough to open to a creative financing type of option. Okay, and with that said, we're gonna end this weekly session, and we'll see you next week. Every week is different, right? We have new leads, we have new deal progress, we have kind of 10, 12 properties that we are actively working on right now. So we'll be sharing those progress, and then depending on which week, we will also share some wealth building techniques as well. So kind of look out for, obviously keep coming back to this weekly event, and also look out for the classes that we have available as well. So, if you're, learning, you're trying to figure out, what's the right way to, number one, acquire properties, and number two, how to monetize on these techniques. Make sure you follow us on all of these events so you can get a really good idea of how to do it, and then you should be ready to take action. Right? We're still early in the year, so a lot of opportunity and a lot of potential, especially with the new mortgage rate drop. So best of luck, everybody, and I look forward to seeing you in our other events very soon. Have a great day.
I'm kind of pitching myself here as somebody who's an experienced investor, but always, I'm definitely new to this business as well. I just want to speak about this product and just how much, it has really helped me, propel myself, get better with talking with sellers, actually be able to close a deal. My strategies right now have been primarily direct mail, cold calling, and cold texting. And I've found a lot of success with Real Estate IQ, especially being able to get in front of customers, have engaging conversations. And of course, I'm hoping to use all of that to build my own business and eventually retire off.
Excited to be here, and I want to say a big thank you to Real Estate IQ. They have the absolute top leads in the industry and just make investing effortless for all of us as real estate investors here in Texas and obviously everywhere else that they're focused. And I'm proud to be associated with Real Estate IQ. Love what you guys do and love how you all help investors so that we can focus on the thing that makes us the most money, which is the job of real estate investing.
I wanted to jump on this morning and give a shout out to Real Estate IQ. I began my journey with them a few years ago, just using some of the more basic products, the off-market leads. And since then, growing and visiting and talking with not only Steve, but other people who are involved with Real Estate IQ, I've had the opportunity to actually not only be a client, but I also became an investor with them. And that is one of the beauties of being able to be part of Real Estate IQ, is it gives you the opportunity to grow as an investor, especially in real estate.